Hello, friends. Welcome to Nirmal Bang. Today, we are going to put the spotlight on a result review conversation. A company, a stock, which has made a lot of movements in the payment space. We should say that it was the first listed fintech in India, made grounds towards payment platforms, also made name for itself towards the first government e-marketplace, which now basically is very rapidly moving towards becoming the largest marketplace, if not now, maybe in the future. And also now actually is very rapidly actually becoming a major international fintech player. So let me take the name here. We're talking about Infibeam Avenues, and to understand more about the results and how the company is progressing, let me welcome the management here, the executive director of the company, Mr. Vishwas Patel. Vishwasji, welcome to the show.
Thank you. Thank you.
So, Vishwas, let's first start with the numbers here. The numbers actually are painting a growth picture because, again, if I look at the headline numbers, we actually are talking about a sort of good solid growth versus the last year. If I look at the transaction processing numbers, again, 63% growth versus last year. Gross revenue is 80% plus, EBITDA is 20% plus. We actually are talking about profits, which are almost 41% up for the fourth quarter versus last year. Numbers are painting a very solid picture, both on a standalone and console basis. Console profit is also 36% up. So help us understand what are the driving factors, how's the fourth quarter, and why basically we saw such a solid growth in the revenue, and we'll then gradually move into the sort of margin factor. But first, let's talk about the headline numbers.
Sure thing. Good morning, everybody. Okay, so overall, it was a fantastic year for us. We have like our total revenue income has gone across 2,000 crores for the first time, right? And it in our history, and it's 56% up year on year. That's a kind of growth. Even our profit after tax is 136 crores, right? It is up 63% from last year, and EBITDA is also at 180 crores, which is 24% up year on year. If you see the strong growth in digital payments that is going on in India right now, the move toward digital payments. Today, only 25 crore Indians are transacting in digitally. There's a headwind of almost 130, 140 crore Indians who will be coming to digital framework. And digital is so easy to do. It's spreading like wildfire. So we are in the right position at the right place, and now with RBI licensing and other things to do this business, we have received an in principle approval as a payment aggregator, and that helps us to what business we have been doing for 22 years. It helps us to even expedite further and faster. So that last quarter or last 6 months, if you have seen, we are onboarding 8,200 merchants every day with full KYC and other things. So overall, 9.2 million merchants are already on our platform. And if you see, even helping these merchants grow our lending business, which is express settlement, we did more than 2,000 crores last year. So even the quarterly payment growth is at 1.5 lakh crore in last quarter, which is almost up 61%. So even platform business is growing like anything. You heard the Prime Minister tweet on the GEM that it did more than 2 lakh crores on the platform of the marketplace, the government e-marketplace. So that also growth has been fantastic overall. So overall, we are at the right place at the right time on the platform business, on the payments business, and on the express settlement lending business.
Right, and let's sort of understand the platforms one by one here. Now, how's the GM progressing? That's the government e-marketplace. How's that progressing? The numbers quarter after quarter actually have been increasing consistently. What is sort of basis point margin you are making there? And do you actually see any sort of possibility of further increasing the margins?
So all there are multiple platforms within our business. The GEM platform definitely is one of the most prominent ones that is there. That has been more than 100% growth year on year. It's in fact on the way to become the largest marketplace in Asia Pac. It's a government's monopoly, what do you call, marketplace for procurement for central government, right? So that growth has been fantastic. The margins are fixed. Certain on government to government big orders, there is no revenue occurring to us, but on all the rest, there is a good revenue occurring to us. Apart apart from GEM, then there is GeoMart platform that we are powering. Then many others. We have Bill Avenue, which does all the utility payments for all the. We have onboarded almost a million agents across the length and breadth of the country. This so platforms along with payments is a good bind. Like globally, also you have seen eBay with PayPal, or Amazon with Amazon payments, or Rakuten with Rakuten payments, Alibaba with Alipay, right? So that's where the kind of platforms that we have built, which are the largest in their space, along with our payments business, and then moving towards finance, right? Which completes the ecosystem for the growth for the long tail SME. So on all the combination and what we have invested and making it on a different platform. So even on the merchant acquiring piece, we acquired a company called UV Technologies, which allows us to, right now there is a bulky point of sale terminals that are deployed to the merchants everywhere in the offline space. Now, those are not affordable to be put up on the small, say, food cart on the road or other places, right? So here we have a technology where like any kirana shop in any village can just go to Play Store and download the CC Avenue app, and on the same phone, customers can tap their cards, credit, debit, or scan the QR, right? So that's a kind of revolutionary acquiring mechanism that is coming. So that platform that we have undertaken right now, almost 1.5 lakh merchants we onboarded in the last quarter, and it's growing. So that's the kind of change, the transformative technology that we are getting in the country that will further expedite, fasten our growth.
Right, and I'm curious to understand what it implies for your net take rate, which again for our viewers is the earnings per transaction. For example, if Infibeam actually is making almost a 445 lakh crore transactions on its various platforms, they actually earned about 9 basis points in the fourth quarter, every transaction. So, sir, help us understand. And in FY22, you were roughly around 6 basis points. Then FY23, basically, you have jumped around 7.9 as an average, but exit fourth quarter is around 9 basis points. So, how is this actually transition jump happening?
So, if you understand, during the COVID period, most of those discretionary spends on travel, entertainment were down to zero, right? And utility payments and other payments had shot up during the pandemic, right? But now these sectors are back with a bang, and these are percentage-based earnings, vis-a-vis a flat fee earning on a utility transaction, where even if the transaction size is say of 2 lakh rupees, you are making 5 rupees flat on a transaction. While on these sectors that are there in hospitality, travel, entertainment, and other discretionary spend, there's a percentage bips. So with these sectors coming in, the bips margins have increased. And overall, even on the credit card space, on the online total volume of credit cards in the country, we process more than 9% of those transactions through our platform. So those credit offtake cards also increasing, which is a good bips earnings for us, right? So those spending, what overall credit card was around 1 lakh crore last month, it has jumped to 1 lakh 30,000 crores this month, per month, the credit card spends. So those spends and everything, and as I said, only 18 to 22% is digital right now. A lot of folks coming in to do digital payments. So I think that will improve even the BIPS margins, and other things will also increase for the company.
Also, help our viewers understand from the perspective of payment platforms. You seem to be entering new geographies. How that actually could sort of power up your payments TPV, and also basically when you are entering new geographies like Saudi, UAE, Australia, again whenever you are going to enter there, and any new other geographies, what's the sort of plan there? What sort of expectation you actually are having in terms of your payment TPV sort of uptrend, and also are the margins different in those regions versus India?
Sure thing. You are aware our payment systems are the best in the world. So when you have a Google CEO saying to the US Senate, but look at India and how they have progressed on the real-time payments and other things. So it's a matter of proud how we have built the technologies here, which the whole world is looking up to. And you must have seen in where all our prime minister, wherever he goes, says about the India stack and the Indian payment systems that we have, and the UPI numbers are through the roof, right? So those are the testament to the kind of payment systems that we have developed in the country, right? So wherever we go, what we have developed, which is the front end platforms with the back end payment systems, are next gen for those particular market. Test case for an example, say UAE, which we launched a couple of years back. We are already the number one or number two player there, processing in excess of around 10 billion AED a year. So if you were to go to the UAE market, so even Emirates Airlines is using us, all the major developers there for the maintenance of the units, be it MR, Nakhil, Damac. If you want to go to the top of Burj Khalifa to visit, see the highest view from the building, you paid for CC Avenue there. So that's the kind of inroads that we have been able to make in markets like UAE, Saudi. There's a licensing regime coming, but we will be very fast progressing on the Saudi market. UAE, Saudi, and Oman, we power two of the biggest banks there, and very shortly the third one also. So those markets are very within our reach and can be easily. So Middle East and India was the plan till last year. And now we are expanding into Australia also. Australia, the numbers work out very easy and well. It's one of the top five in visitor market, the tourist market in the world there. Very spread out, but concentrated in urban areas in around seven or eight there. And I think with our new age technology, the tap pay thing that we have with mobile phones, which can easily be transformative from deploying a $200 a POS terminal, a bulky one with printer rolls and battery problems, and sending them paper rolls every month to print those transactions through a new app-based acquiring on a smartphone, right? In their existing merchant smartphone is going to be very transformative. So hence, Australia is one of the first markets after Middle East is where we are getting into. We are already looking into US. Our subsidiary is there. So we'll be going this in the next 1 or 2 years. We'll be getting into this markets.
Very nice. And what sort of expectation are you actually expecting that from these 5 or 6 geographies you would be actually able to sort of develop the current payment TPV? Like what sort of growth trajectory you are looking at?
Yes. So overall, since India continues to grow, but we have expected that 25% of our volumes will be from international markets in a year or two from now. The in international, the take rates is also good. It's in UAE, it's in excess of 15 to 18 bips there.
Okay.
So there the margins are also better, and it works good for us that way in those
Right.
markets.
So blended take rates actually are then going to go up. It's a very natural sort of conclusion.
Yes.
Now let's move towards the sort of and before we talk about other things, let's talk about return ratios here. Uh, we have been actually seeing that gradually, steadily, your return ratios are improving. For example, return on equity was 2 years back around 5%, 5.7%, then to 6. Last year, FY23, 7%. Return on capital employed from 6% FY21 now has jumped to 10%. Uh, are there any major capex activities which we are taking up in the next 3 years, or largely now we are going to be asset light and we should be expecting now gradually improvement in return ratios?
I think it will improve further. The major capex that was there to be deployed in building all these platforms and doing the acquisition like Tap Pay and other things for the payment systems and app is already done. The only major expenses we see is in marketing as we go deeper into various geographies. Those are the costs that might come in. But overall, the back-end systems, the volumes, the scalability, the next gen technology which can be transformative in any jurisdiction, right, is already there. And as you are aware, ask anybody in the industry, in our payments industry, we are considered the gold standards since none of the major competitors are acquiring any online merchants now. So from that perspective also, and our processes, it's testament to everything that we have done over the last 22 years. And we continue to reward even the shareholders also. So it's like third year in a running, we are giving out dividends. We have declared dividends yesterday at 5% for the full year. And it's a third year in a running that we are giving dividends. So we're trying to create shareholder value also.
And between dividends and share buybacks, why dividends was a natural choice?
Dividend, yes, definitely. Why not reward the existing shareholders? that is there. Share buyback, I think it's still premature right now, but maybe we'll consider in the coming quarters.
Okay. And any sort of plans in the future right now? You made some acquisitions in the past. Any sort of plans where you're looking to sort of plug any gap, particularly in your ecosystem, or any inorganic growth plans?
Yeah, we are debt free and we have 300 crores plus cash in our books right now, and we are positive. We do look at inorganic growth, just like the TapPay opportunity, the UV technologies, which was one of the first which can work in an app with a certified pin on glass, one of the first in Asia Pac certified by the card networks, where a debit card pin can be put on the glass of a mobile phone. That's the kind of certification in new. So anything new that excites us, that furthers our cause and expedites our growth even faster, we definitely look at it and with very keen eyes. And we're always in the lookout if we find. So inorganic growth in the key business that we have, definitely we look into it continuously.
Right. And one short point on what actually the payment aggregator license from RBI means for you, and what we should be expecting under that.
So a payment aggregator license from the RBI means that the payment acceptance, any company who wants to get into payment business and acquire merchants and get settlements in their books, and then they settle to the merchants, right? That kind of thing is now licensed by RBI. All the kind of security norms is a very difficult license to get, let me tell you, because the kind of standard security licenses, right? All the other things that is there. So lot of two of our biggest competitors, their application has been returned, and two of them have been told to stop onboarding new merchants for the last 5 months or so. So it's the kind of level that RBI has put in. It will help safely grow the market. For us, 22 years we have been doing it, and with this license, it further gives government sanctity to continue the business and even grow even faster.
Right. One short word on how the geo platform volumes actually are showing up to you, like from the perspective of your success in servicing the geo customers. And since we have been seeing the sort of retail volume growth in the Reliance Retail, Reliance Geo, again, volume growth has been stellar. So how basically it implies to you, and are the sort of take rates almost similar to GEM, or like how's the overall business looking to you?
So, as far as GeoMart is concerned, there are certain confidentiality clauses that we can't say our take rates or our charging or other things, because that is confidentiality under the agreement between the two companies that is there. But overall, you see in India, right? There will be 4 or 5 marketplaces that will survive, right? Amazon, Flipkart being two which are already there. From the government perspective, the monopoly marketplace of the government, that is the GEM platform, right? That marketplace will continue to grow because there's going to be 7 lakh crores of central government procurement. Today, 2 lakh crores a year is going. It will further grow. GEM platform. So that's a government marketplace. The other two platforms are definitely the Reliance platform with their online to offline strategy, with the kind of retail network and the online piece that they are building, and of course the Tata NUU is there with their brands and other things. So these 4 or 5 are going to be there. We are proud to be associated with 2 of the major brands from the platform perspective. That's the GEM and the GeoMart. As far as the others, we work together in some way or the other through our payment systems. So Geo, as far as that, the take-up is very good. You always be continuously hearing people moving, but as confidentially says, we can't tell their numbers or our margins on it.
Okay, Vishwaji, it was a pleasure talking to you and hearing everything, which is so exciting about the journey of the company from India to international markets. We will keep wishing you all the best for your international journey, and also see the Indian fintech company being recognized across the world. Thank you for coming on the show.
Thank you. Thank you very much.
And with that, dear viewers, we hope you enjoyed the show. It's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.